Welcome to Small Account Club. I think I'm going to go with the Small Account Club rather than 30-minute chart club because we're uh, growing and evolving so quickly here. So we're probably going to land on that. All right. So what we're going to talk about today is a couple of trades that we put on since the last time we met. One was Tesla. We opened that, closed that. We have now entered a new trade, and that is Meta. We're going to talk about that trade. And let's just give you a quick update of what we're doing here and what the goal is of this session. And the session evolves, or the goal is to build an account. We deposited $20,000 on August the 11th, 2023 into my brokerage account. And right now that account is up 7.53%, or $1,506.72 on 3 closing trades, 1 in progress, which is currently profitable, but it's still way too early to count our chickens before they're hatched. So let's go to comments really quick. And I'll show you oh, look who's here. The lovely Jody. I was hoping you were going to make it. There she is. Perfect. Ryan. I'm not always late. Every once in a while, I'm a little bit tardy. Today, I had so much to do. I was running around. I went to the gym. I got back, and I honestly wasn't prepared for this live stream. I'm still not. So we're gonna play it by ear. We're gonna go over some charts that I like, and yeah, I love the attitude. Great enthusiasm. All right, let's get to it. Let me share my screen. I thought I was sharing, and I was not. So I'll show you the account, and this is for the benefit of those that are new. All right, so here's where I deposited $20,000. Our current change since that point in time is plus 7.53%, for a total of $1,506.72. Right now, we're using Tier 2 option strategies, meaning for those folks that are not eligible for Tier 3, meaning you can't do any naked selling of options, which is what I generally do. Not all the time, but generally that's what I do. I'm using the same strategy that you are to help build a small account into a larger account, and then we'll change it to undefined risk or naked strategies. So for the purposes of right now, defined risk strategies. And let's talk about the Tesla trade, which we closed, I forget when. We've only done 4 trades here because I only want high probability trades. Let's go to Tesla. And then we'll talk about the Meta trade, why we did it, and how we'll manage that trade. So here's a daily chart of Tesla. And I post all of the alerts when we enter these trades into the small account trades channel. This is our private membership channel. So you need to be a member to get this. So Tesla, we opened it up on the 29th of August. Aug 29. So we opened it up. This was a spread, a call spread, I believe. Yes. So I sold a 295 call option, and then as an insurance policy, I bought a 320 call option, and that keeps me in compliance with Tier 2 trading guidelines or metrics, whatever their rules are. So then we subsequently closed that position on when did we close this? It was pretty quick, this trade. The 29th. Yeah, we closed out on the 1st. So we closed it Sept 1. And we made a good little piece of coin on this one. So let's talk about the trade. So what they did, we'll go to a 15-minute view. I like directional plays. I like unsustainable moves up higher. And we opened this on the 29th, and they were jacking it up. Actually, I'm sorry. This does not include. We need to go back a little bit further. 1 month, the 29th. Here we are. They were ripping it up higher. So the bet here was that they were not going to be able to sustain the momentum for much longer. So the shares were trading at around, let's call it 250 per share. And so I said, okay, the bet is that I don't believe that these shares are going to make it up to 295 before we get a major correction. And we went out about 45 days on this. So we opened it up on the 29th, closed, and we sold the October 6th calls. So it gave us plenty of time to be right. And ultimately, what happened here is that by the 30th, or the first, I should say, the shares were cratering. So there's something called call skew. Even though you don't have a big IV ranking for the stock, if the stock is in a very, very strong uptrend, well, what that means is that you have a lot of demand for the calls. So the calls get abnormally expensive because of the demand. And it may not be reflected in the IV ranking. So our play here was that the call options were expensive. So I was going to sell more. I was going to sell calls to those that are willing to buy them for a ridiculous price. And then my bet was that as the shares contracted, that all of that call skew, the inflation of the call, the artificial inflation of the call would evaporate. And that's exactly what happened. So while I sold a 45-day call, I only kept the trade open for a couple of days, and then we booked our profits and we moved to the sidelines, raised liquidity. We looked for our next victim. So that's the trade on Tesla, and these are the trades that I really, really like to do. Now, another option for us to have done here would have been, okay, so we opened up and we were profitable on this spread that we had opened. So we sold a call, we bought a call as insurance. But on a pullback, what I could have done is said, okay, down here, I could have sold a put corresponding where we sold, meaning delta wise. A delta is, do I have it up here? No, I don't. So a delta equals percentage change in option relative to every dollar move in common stock. Example, I sold a 10 delta. So that means that for every dollar that Tesla moves, the options change by a dime or 10%. So what I would have done on this pullback here is what I could have done was sell a 10 delta put with a corresponding insurance policy just below in case the market gets really, really wonky and goes against us. But I figured, you know what, we made so much money in such a short period of time, and I'm not very bullish on the market. So why do I want to stick around? I made a quick buck. Let's get out of this, make capital real. Let's look for our next victim. And it took a while. And I found our next victim on Friday, and that was Meta. And what was going on with Meta was this, and I'll show you the chart of what I was looking at on Meta. It was we'll just bring up. It was a 4-hour chart. Now, in my large account, I'm short of Meta. I bet that Meta is going to decline. and I also have a strangle, a very tight strangle. It's paying me a lot of cash flow right now, so I don't want to let it go if I don't have to. But we are beyond that 21-day period of expiration. Things get a little bit gamma risky, meaning you can get a big event that could hurt you. So we're not going to stick around probably more than a week on the trade. We're going to make profits real and get out of the strangle. But what I was looking at on Friday was this. For the past couple of days, they've been trying to break Meta out. After a nice little W formation here, they tried to break it out only to get rejected. And what I knew about Meta was that on a daily time frame, we were at resistance because, in fact, we had broken down on Thursday. Here was a tight wedge formation, and this is where technical analysis meets options. Okay, so not many people on YouTube do this. They don't take the technical analysis and say, okay, I'm going to incorporate the charts into my strategy for how we're going to trade options. That's what we do here. That's the difference. So the breakdown on Meta on Thursday, that was my aha moment. I was like, okay, I think that they're going to probably rally this back. And if they begin to sell it off, that's going to tell me in all probability that Meta is going to sell off in at least the short term. So I saw these topping tails back to that 4-hour chart. I guess not. And I began to see the sellers move in after they created this wick. And so what I did is I said, okay, I'm going to do another Tesla trade because it works so well. So yesterday, I sold to open. This is still a live trade, so there's no closing trade here. I sold to open 7 contracts of the 250 call options. That's roughly a 10 delta. And I bought to open as insurance, as I'm required to do if I'm going to adhere to the tier 2 policy, as many people with small accounts must. Uh, I sold to open an insurance policy. Now, in my large account, I wouldn't have bought this insurance policy because I don't have to. I'm going to make less money on this trade, but for the benefit of those that are building an account, well, it's worth it. So if you become a customer, I make it back that way. So it's all good. So this is a live trade, and the probability, so we opened up going out into November, no less, 11/17, 250. When I opened this, there was an 88% probability of profit. And the way we go in and we validate that, and we can see whether or not that's still valid, is we do this. Bring up Meta, go to our Analyze tab. We go out to 17 November, and the probability of it. So when I open this up, I was looking for a 75 bare minimum, 75% probability of closing out of the money. That is now up to 81.27% of, because it's sold off. Therefore, the value of that option declined in value, which is good for me. I want the options to decline in value. It's because we're the banker, we're the casino and not the gambler, hoping that the option is going to increase in value. So right now we have a very, very strong probability of making money on this trade. I could close it right out right now if I wanted to. Let me bring up that account. So here is the account. Here's the position. And you can see at current over here, this is the delta. It's got a negative 10 delta, which is good. It's still up there. That hasn't changed all that much. I'm surprised. And this is paying us right now, even with the insurance policy. The insurance policy is paying for itself. And you can look down here, there's $34.85. What that is our theta decay. That's how much we make per day on this trade simply by being the banker and not or being the casino and not the gambler. It just time decay is in our favor. And rarely in trading is time in your favor. When you sell options, it's in your favor. So right now, we're making nearly 35 bucks a day, and this will only increase in value as we near expiration because now the time decay curve is really beginning to ramp up, and I suspect that this is going to be a profitable trade. We're up at current, what are we up on this? Up nearly 12% on the trade, or $136.74. So that's the small account trade. So if you have any questions, please ask me. And while I'm waiting for any questions to come through, I'm going to bring up some charts that we're watching for the new trading week. And we'll talk about those in a moment. So what I'm doing here is I ran a scan of extreme oversold stocks. Now, generally, these would usually sport a higher IV ranking. Now, ResMed, high quality S&P 500 company, but it's getting butchered. IV ranking, it's only 15%. But the good part about this trade here is that, first off, let me explain to you what I'm looking at in terms of why I like it. So we're always looking for high probability trades, high probability of profit. All right. So daily trade or daily chart, you can see that RSI is below 20, quote unquote, oversold. That doesn't mean it can't go lower. It most certainly can. But when you take a look at a weekly chart, you can see here that we have support down at 146.11. Now, what I could do here, if I was so inclined, is I could sell some puts. I don't know how liquid the options are. This is the first time I'm doing this with ResMed. We would go out 42 days. Let's play around. We'll try to go with a 10 delta put. I don't know how much it's going to pay us. It may not be worthwhile. 16 delta. That's not bad. Not bad. So I can open up this trade. I could sell to open a 130 strike on the put side. Now, keep in mind that support on ResMed is right here at 146.11. Doesn't mean it's going to hold, but there's a good chance that it will with a RSI down below 20. So we're due for a pop here. So I would be okay because we have support back here at that 130 mark. So this to me is an attractive trade. Sell to open 130 put going out into October. Will I hold it till October? Probably not. But if we get a rally, I book the profits. We move to the sidelines, targeting about a 50% profit on the trade. And another way to trade this would be to simply add a call side leg. I doubt I'll do this unless the shares rally. If they rally, maybe I'll sell the calls on a rally because they increase in value. We'll take a look at a 150. That's not going to be a 170 call. So this would be a classic strangle. It would be a, this is good. It would be a sell to open on all. A credit in our account, minute one. On this, I would probably go with 10 contracts. That's $1,750 deposited into our account. And then this column here, the time decay begins to eat away at that premium, which is good for us. Again, we're not the casino, we're not the gambler here, we're the casino, right? The longer the player stays at the table, the greater it is that we're going to make money. So we want uh we want time decay. We like time decay, whereas the buyer of the option hates time decay. What else do we like going into the new trading week? I did like Dollar General, and we try to put a trade in, and this is a very similar chart as what ResMed was. Dollar General, extreme oversold stock. RSI was well below 20 at that point in time. Now it's back above it. I was looking for it to hit support at 120. The discipline is that you got to wait for it to hit support. Just because this rally doesn't mean it's going to go up higher, because it never hit support. Why do we want to make sure that we're at a support level on extreme oversold stocks before we buy the stock or we sell a put? We want we want to make sure that we have buyers of like mind that are at that support level in the game with us. We have plenty of people out there that are doing the same thing I am, that know 120 is support. So if we got down there and I sold a put down there, the probability of us making a profit was measurably higher than what it would be if I would have sold a put on Friday afternoon after the shares would rally. Right now, this stock is dead to me unless, of course, it begins to sell off yet again. You got to make sure the odds are in your favor. If they're not, walk away. There's no conversation to be had. Walk away from the trade. There are other ones out there. Case in point. Let's run this scan again. I go with higher dollar stocks because generally the options are more liquid. And having liquid options is critical to the game. You don't want to have big, wide spreads and trying to get filled at a reasonable price. You want active options. ResMed, it's not a highly liquid option. Now, Dollar Tree is another play. I'm surprised this didn't rally with Dollar General. RSI down below 20. We're bottoming out here. Do we have support below? Let's check that out. We do at 110. Let's see if where we close, there are other support levels before that. Not that I like. I'm liking 110. So what we could do here, once we get down to 110, is exactly what we just did with ResMed, is we take a look at selling puts. We're at 116. Let's go out, play around here. 110 strike. That's got 105 has got an 11 delta. That's reasonable. We can get paid, assuming that we're at our price target right now. We could get paid 62 cents per contract. If I did 10 contracts, that's $620 deposited into our account. But we're not at support yet. Therefore, I'm not ready to execute. I could execute on this trade, and it'll probably be profitable, but why risk it? So we have plenty of other trades on the table right now. So this is another possible trade for the new trading week. Dollar Tree, ResMed. If we see a pretty big pullback in Meta next week, we'll probably book profits on that trade, rotate into one of these higher probability trades, and we just rinse, wash, repeat, and we'll meet back yet again. Does anybody have any questions? Anyone at all? I want to quickly go to my list of 30-minute charts to see whether or not anything is extremely overbought or extremely oversold on a 30-minute basis. because this brings us an opportunity as well. Qs, they look like they want to pop on Monday. Silver, I think this goes lower because the dollar is going up. Airbnb came out with bad news on Thursday. New York State basically banning Airbnb. What did the stock do? Rallied. So what I would do here is I would wait for a continuation rally on Airbnb. And then what I would do is, where is resistance up here? Once it got up to around 155 per share, I would begin to sell calls, just like we did with Tesla, up and into this congestion area here where there are a lot of sellers up there. So I suspect that we're not going to get much further beyond 155 to 165 before we get some overhead supply, meaning those buyers back here that's held through this sell-off, they're going to want their money back. So we're going to sell calls up and into them. And then as they sell in, the options decay in value. And what we do is we just wait and we book our profits and we move to the sidelines. Jody, about VFS. If I think they may make the EV company, would it hurt to average down? VFS. Is this the one you asked me about the other night? The IPO? So it's not an IPO. Yeah, this is not a stock you want an average down to. I think I have annotations on TrendSpider. Yeah. So these are the annotations I drew on Sunday or Thursday night. We broke that support level. It's got to hold 1590. So to average down on this, I would need to know your basis cost, because if your basis cost is way up here, you're going to need to buy a lot of shares, a lot of shares. If it's below 20, your basis cost, then it might be worthwhile to build a position here or add to the position. But other than that, I'm not an advocate of averaging down on a position at all, unless, of course, it's an extreme oversold stock, which this is not. It's a Vietnamese EV company, debuted on the NASDAQ. What was it, a SPAC and then converted into VFS? Because it's got history here. I can't condone averaging down on a losing trade. I just can't do it. Sorry, Jody. If you're in the house of pain right now, I've been there, but you know, why did this thing go up? I need to understand why it went up. Do we know why it went up like this? All right. Sorry. Okay, let's continue on. So we like Airbnb, but at higher prices. Adobe's reporting earnings, I think, this week. So there's only 1% of the float out there. Let's just say the 1% of the shares outstanding. Yeah. So it looks as though there was a major short squeeze on this. Um, avoid it. Avoid it. Play the smart game. Play the smart game. Get away from these EV stocks. Uh, I've been where you are. I've been where you are. And this is why I started doing this with the showing small accounts. You can build them up. You don't need to be in equities because you got that overnight risk, right? And uh, that risk is you got to be able to sleep at night. And so that's why I prefer options trading relative to just owning stock outright. Now there are times where I do it, but it's got to be a very, very good reason. Uh, so think about trying to sell some options. Think about it. All right, so Amazon looking good into the new trading week. I think this goes up higher. I'm not ready to sell premium here unless they're puts. However, I'm iffy on the market. Apple's one that's pretty beaten up already. I was going to sell premium here. I didn't. I think this goes lower. You could probably still sell premium on this one. Nothing to do here. Boeing, nothing to do here. Maybe some puts on Boeing. This is going lower. No, I would not sell puts. BlackRock, no premium there. Too much capital tied up. Same thing with Chipotle. Very liquid options. Coinbase looking very good. Coinbase looks like it may want to move up higher. What we're looking at here, and this is odd because Bitcoin has been so weak and they're highly correlated. So Coinbase broke out. Nice breakout on Friday, 30-minute chart. Let's go to the daily here. Yeah, this is going up. This is going up. I would sell puts here. I would want to be right below this support level. Maybe down at the 60 strike. That's a 6 delta. Let's go up a little bit more. 65. That's interesting to me. That's an interesting trade. And if you're trading with a tier 2 account, what you would do is everything's sell to open. Nothing is buy to open. Actually, I'm sorry. It is a buy to open. 65. I would buy the 50 put. So your net credit here would be 91 cents. So if you're doing 10 contracts, it's $910, and you're far away from the fire. If it gaps down $2, what do you care? If it gaps up $2, what do you care? You're so far away from where the shares are trading that life is good, and that's why we like to sell premium. That's why we do this. And if you wanted to open up let's say the share, you opened up this position on Friday and the shares move up higher on Monday, and now you want to sell corresponding calls, well, you could do that. Let's first figure out which ones we want to sell. We want to go with an 11 delta. There you go. The 110s are your strike price. And then if you had to buy the insurance policy, if you're tier 1 or tier 2, I should say, then you would buy. Where are we at here? 110. Go for $15 wide. You could sell a call. You're always going to make more money on the put side, but your net credit here, if you sold a call after a rally, would be a buck 45 on this trade. And if you're doing 10 contracts, it's $1,450. That's deposited into your account. Now, all you're looking to do is stick around for 50% of that, and then you move off to the next trade. So this is a good looking trade to me. It's a low IV trade, not my favorite, but in this environment, we need to be creative. We need to take advantage of oversold conditions, overbought conditions, and right now the stock looks like it wants to break out, which it's already beginning to do. Therefore, we'll initially sell puts. Then, as the shares begin to move up higher, we'll sell the calls. Now, what if I'm wrong? What if I'm wrong and we sell this put? Let's get rid of the calls. Let's say we never make it to selling the call. And let's say that this stock falls back down to the support level at 77.52. Am I worried? No, because my strike is down at 65 bucks. I'm good here. So this is why we like to sell premium. Eric, anything on BA? I'm long this week. I think it's a dog with fleas. I think it's going lower. There's nothing to like here. You look for support. I always like the 190 support level on Boeing. If it got down there, I'd be a buyer, but I'm not in love with this stock. It just can't get out of its own way. So I wish I could be more optimistic. I just can't. Going to ask Schwab for tier 2 this week, you bet. And if you just take a step back and don't get greedy, the key to this game is be smart, which I'm sure you are. Be smart. Don't go with a lot of guys will come out there on YouTube, and it really ticks me off. They'll come out and they'll tell you that, let's say on the Coinbase trade, they'll sell a 15 to 20 delta. So your probability of making money is still greater than 50-50, but it's still very, very risky. It's still very, very risky, which is why I like to go very conservative. 10 delta, maybe a little bit more than that, 10, 11 delta. That way I'm far away from any fireworks that may go off on this stock in case it goes the wrong direction. So don't get greedy. Don't listen to these other YouTube guys. All you're looking for is one word: consistency. Consistency of profitability. Week after week, you just want that time decay to work for you. If you get too aggressive and you start selling 20, 25 delta options, you're going to be doing battle with that stock, challenging your strike price. All too often, that's not what you want to do. That is what I call stinking thinking. You don't want to do that. So let me know when you get set up, Jody. You're welcome. I wish I could be more constructive on it. I just can't be. It's right now. Right now, honestly, Boeing is a stock that I would be looking to sell calls on, a call spread, because it's got so much more room to the downside to go. Now, if it got down to that 190 price target, I'd be selling puts after I sold the calls. So I think there's a trade to be had here. I just wouldn't want to own the common stock. So avoid the common stock. Look to sell calls. Look to sell puts. Once it gets down to a good support level, sell puts. Right now, I'd just be a call seller on this. Let's see what a 10 delta premium would get us. 42 days is good. 45 days, that's when the time decay really begins to ramp up. So we're going to go to 42 days here. We close at 211. Let's shop around. What would a 235 put bring us? A call. We want to sell calls. Sorry. That's an 11 delta. That's attractive. So that's a 235 call. So we want to go to our risk calculator and say, okay, what was that strike? 235s. Going out to 1020. So we're well above. We're looking at a probability of profit of about 80% on that trade, rather than going in on Monday morning, buying the stock and hoping that it doesn't go down. I would rather sell the calls. And of course, if you're a tier 2, you're going to need to put an insurance policy on that trade. So you're going to sell to open the 235s, 11 delta, and buy to open, let's say, a 245 net credit, 57 cents, 10 contracts, $570. And then as the shares begin to pull down here to this support level at that 190 support level, I would then look to sell premium down here at around 165, meaning sell calls, puts. And this would create what you call an iron condor. Obviously, when we get down to that price, this value is going to be a lot higher than what it is right now. So we wouldn't execute on this trade, but we're just wargaming it out right now, thinking about what we may want to do once you get down to that support level. We're not there yet. So let's take this off, but that's where our head is at. So if it got down to that 190 support level, I could book a profit here and just make it real, find another trade. If I found one, I would close out the trade. If I couldn't find anything else to roll into, then I'd stick with this one and say, okay, I'll sell a corresponding put and then look for the shares to rally back. And now I have a iron condor. So that would be the trade there. All right, folks, that is pretty much it. I'm going to go through a couple more charts. If there are no more questions, I'm going to say have a great day to everyone. I'm going to go through these charts waiting for questions. We spoke about Coinbase. CrowdStrike is looking good. That's pretty extended. What's the daily chart look like here? Oh, it's extended. You could sell calls here. Nah, forget it. There's no premium. Disney, junk. You're welcome, Jody. DocuSign, Domino's, reversal bar, nothing like there. Goog, nothing going on there. We're looking for extreme overbought or extreme oversold, or a continuation breakout. One of those three. Meta, nothing going on there. We already spoke about that one. Microsoft, this may rip up higher. I already have a put and a call on that. Nike, junk stock. I want nothing to do with it. Netflix, we already have a position here. NVIDIA, what's NVIDIA doing? Def. PayPal, avoid. Qualcomm, this is going to rally. You could sell puts on this one. No, there's no premium. See this 0% here? That's no good. Walk away. Shopify. This is probably going to get a continuation move up higher, but nothing to do here yet. CRM, I believe they reported earnings. This is going up higher. Twilio, they've reported, not much going on there. Tesla, Not much going on there. Walmart, that's going up higher. Nothing to do there. Target, that's probably going lower. Nothing to do there. Zoom, nothing going on here. All right, so Dollar Tree, ResMed, Coinbase, top 3 stocks going into the new trading week. Folks, thanks for being here. It's been awesome having you. If you have any questions, always just drop me a line. We'll be going live on Thursday night stock charts live. Join us there. Also, if you're not on our list of 30-minute chart club subscribers, link below. And if you want the alerts when I trade these stocks real time, join 14-day free trial offer, the Contrarian Trader, also a link below. And with that, folks, have an awesome remainder of your weekend. I'll talk to you soon. Be well.